We all know that the coronavirus has caused havoc across most industries. Hi, I'm Snell, an agricultural economist at the University of Kentucky. And today I'd like to briefly share with you a few slides which express some of my thoughts and observations of the impact of COVID-19 on our farmers and consumers. Most farmers will tell you that even before COVID-19 came about, that the past few years has been very challenging with depressed market prices, weather issues, and an ongoing trade war. Given cash flow and liquidity concerns that many of our farmers were facing, 2020 was actually setting up to be a very critical year for the ag economy. But we actually entered 2020 with some optimism. The US-Mexico-Canada trade agreement was on the verge of being ratified. We had signed a trade deal with China, and the Trump administration was talking about additional trade agreements with the European Union and the United Kingdom, which had the potential to further expand agricultural trade. We were also in a fairly low interest rate environment, which is important not only to hold down borrowing costs, but also to support land values. While there was some optimism, we also had some concerns entering 2020. The world economy, the global economy was slowing down. As income and economic growth was not accelerating as what we've seen in previous years. And we were also seeing the value of the US dollar to increase, which has a tendency to hurt our exports. But overall, again, there was some optimism that we'd have a demand shock in 2020 in the form of a significant increase in agricultural trade. Well, we ended up with a demand shock. It was not in the form of trade, but in terms of the COVID-19 virus having significant impact on the global economy in terms of economic growth, buying power, jobs, just slow down across the globe in terms of our economy. Typically, though, agriculture tends to be somewhat shielded when we have economic downturns because we all eat. We have a decline in our buying powers or income or slow in the growth of our income. We may not buy those fillets. We may switch to lower value cuts of meat, may buy a hamburger instead of, again, a steak. We may not go out to eat as much. But again, agriculture tends to be somewhat shielded from an economic downturn compared to other sectors of the economy, such as the housing market, or manufacturing, or entertainment, or travel industries. As an example, if you look back at the last downturn, major downturn in our overall economy from 2007 through 2009, what's labeled typically as a Great Recession. And what we're showing here are food sales during that time frame. And again, you can see a slowdown in the growth and a little bit of a downturn in 2008 to 2009, but still the ag economy compared to the food markets, compared to other sectors of the economy, were able to somewhat weather the storm. But this current event we're involved with COVID-19 is much different from what we experienced in the Great Recession. One is the economic downturn is much more severe in terms of not only income but jobs, but also we've had major supply disruptions in our food supply chain, ranging from empty grocery shelves to long lines at food banks, restaurants and processing plants across the nation closing down, to farmers destroying their crops without any place to sell them in the current environment. Been a lot of a focus of this COVID-19 on consumers and the price we're paying for food, a lot of media reports. And, you know, there's no doubt there has been some upward pressure, especially during the panic buying. We saw meat prices to go up and egg prices and other items that were quickly being pulled off the shelf in our grocery stores. But up until this point, food price inflation has not been significant. USDA actually a couple of weeks ago put their forecast out that for the year, They're expecting food price inflation to be about 1.5 to 2.5%, which you see has been growing a little bit compared to the past couple of years, but still below our 20-year average and nowhere near the level of food price inflation that we had back during the Great Recession. But while we haven't seen a lot of changes in food price inflation, and again, we've got a lot of closing and processing plants right now are shut down due to the virus, so that's going to have some impact, and it's going to push up a little bit upward pressure on food prices. We don't expect them to change considerably in 2020, assuming that the supply chain can get them back on track in the next few weeks. But what we have seen is dramatic impact of all this disruption on the supply chain in terms of agricultural prices. Here's a slide that I borrowed from the American Farm Bureau that shows a lot indicating the free fall in the ag commodity prices starting from the first part of the year up until the middle part of April, and is somewhat leveled off in recent weeks. But again, you can see the tremendous downfall in agricultural prices during this time period, with a lot of commodities seeing prices at 10 to 20% or greater in the downturn in terms of agricultural prices. And when you look at, this is some estimates actually from the Food and Agricultural Policy Research Institute out of the University of Missouri. They're expecting this low price environment to continue the remaining part of the year, even into 2021. And when you apply those prices with expected marketings, FAPRI is actually estimating about a $20 billion, 18% loss in U.S. net farm income for 2020 compared to 2019. And if we look at Kentucky, these are actually an estimate that our department put forward, and actually back in December of last year, we were at the Kentucky Farm Bureau Convention where we always give our annual estimates. At that point, certainly not knowing COVID-19 was on the verge of impacting the U.S. ag market, we were projecting that Kentucky agri cash receipts would be around $6 billion. But taking into account the anticipation of lower prices, disruption in our supply chain, enterprise mixed by some of our producers, a lot of uncertainty. Right now, we're looking at probably somewhere around $5.5, $5.6 billion ag economy. So around a $400 to $600 million loss in cash receipts as a result of this virus impacting our agricultural markets. As far as net farm income, this slide here is, even though we've seen some pretty significant downturns in the national economy, Kentucky net farm income has somewhat weathered the storm over the past 4 or 5 years because our yields have been pretty decent compared to some of the national numbers, as well as our agricultural income has been supported by some government payments that have been made available to offset the impacts of the trade war. But the question is now, if we lose $500-600 million of cash receipts as a result of COVID-19, how much of a government payment will have to be put in place to offset this anticipated drop in our cash receipts? Right now, our farmers, just like farmers across the nation, are looking at a package that it's been passed by Congress and signed by the President. It's going to provide about $19 billion of support across the nation, about $16 billion in direct payments, and $3 billion of product purchases to help support ag markets. So we'll have to wait and see how that comes about. USDA has not released the details of that promotion package. And again, we are not sure when that will come out, hopefully in the next couple of weeks, and provide some support there for a fragile agricultural economy. So moving forward, a lot of uncertainty, the length, the intensity of COVID-19, how much it's going to impact our economy here in the United States as well as around the world, and for how long, and just overall the impact upon food and energy demand, how it's going to impact trade and agricultural prices. But we know that COVID-19 is going to cause a lot of adjustments. Consumers, we've got a lot of uncertainty on what they're going to buy, where they're going to buy, how much they're going to buy, given the impacts that it's had upon their purchasing power with losses of incomes. Certainly our restaurants have been impacted considerably. What will they do to try to lure back customers? Our restaurant industry, food service accounts for about 50% traditionally of our agricultural and food sales. What about the disruptions in the food supply chain? How are they going to adjust to ensure a safe and reliable and affordable food supplies as we go forward? Continue to be a lot of attention to what's going on in Washington, D.C. to provide some dollars as well as for programs to support food in our farm sector. And finally, what about our farmers? What about their crop mix for 2020? Input use. A lot of our farmers are looking at trying to supply a lot of our products locally, given the increase in the local food markets and just the overall survival of many of our producers. Again, they were very fragile going into 2020 and we're needing and hoping for a good year. So, just to finish, just a lot of unknowns and many of adjustments for our farmers and food consumers as we move forward during this unprecedented time in our overall economy.